Good evening. Thank you all so much for joining me today. We've got a really great show coming up. We're going to be talking about the real estate market, which all of us are kind of sitting with bated breath right now, thinking about how the mortgage rate increase is going to be affecting our market. The truth is, markets are constantly moving. The last time we had a market shift in the United States, people took a really long time to figure out what was happening. So it's really important for us as agents to stay on top of these changes because we advise our clients what kind of offers to make. And if we're making offers on properties, thinking there's way more offers coming in than what there actually is, we're not going to advise very well. So I am constantly following these markets, trying to figure out the best way to advise clients. So there's a few different ways we can look at the market. The first one is showing data. We're going to be looking at a lot of that showing data tonight because really that is the quickest way for us to get an idea of what kind of market shifts are happening. Price changes don't come along until well after showing slow down. And so showing data is the thing that I follow very, very closely. But the problem with showing data is that it only tells us the story of what has happened. It doesn't tell us what's happening right now or even what's happening or what has happened very recently. It takes time to compile that data and analyze it and decide what's going on with it. So we're also going to talk about some stories on the ground. These are just anecdotes of things that have happened in my office over the last week or two, just to kind of give us an idea of some things that are happening in the market. Another great thing we're going to see tonight is my friend Trevor Smith. He is joining me as a special guest tonight. He's a lender in Charlotte, and he's like the guy version of me, okay? He is, when I asked if he'd come on the show, he was like, yeah, can I send you some charts and graphs so you can pull them up for me and I can talk about them? I'm like, dude, my audience loves that. We're all about data and analyzing it and seeing what's happening in the market today. So I'll bring him on in just a second. The other person joining us today is Timothy. You all know him as the editor. He is the Roz to my Frazier. If you don't know who that is, you're probably not a Gen Xer. Let me know in the comments if you know who Roz Doyle is. And without further ado, let me bring Trevor on.
Hey, how's it going?
Going well. Y'all say good evening to Trevor.
Okay. I'm excited to be here.
Glad to have you. All righty. So, have you been noticing a lot of shifts in your market right now? We'll get into the data in a little while, but just tell me kind of what you're seeing.
I mean, the trend has been going on for a little while now in terms of like working with borrowers. I mean, it's the same stuff that you guys are seeing and we're hearing it directly from the agents. It's just how can we find the best way to position our clients when it comes to buying a house, and those are some of the struggles that we know a lot of buyers are dealing with right now. So, I feel like buyers are still, they're not overwhelmed yet by the changes in interest rates, but they're definitely starting to feel that as a pain point.
Yeah, I think our median price point is somewhere in the, it's actually in the 400s or so, but I think really popular price point for my market is like 500. Mm-hmm. And that market, I think we're up $700 a month in mortgage payment from last year, just with these mortgage rate changes. Yep. So it's actually kind of a big deal. Hey there, Jackie. Thanks for joining us. If y'all have comments or questions, please feel free to leave them in the chat. We'd love to answer them if we're able. If not, and we need to pull more data to figure out what the answers are to your questions, we're glad to do that and leave it in the comments later on. So definitely ask your questions. All right, let me pull up some of this showing data. I find it really, really interesting. Timothy, why don't you pull it up? Because I can't figure out how to do it. I am not the technical person.
This is why it's good to have the editor.
Yes, there we go. Okay. All right. So what we're looking at here is those three different colors are the three different months. Okay. So we're looking at the spring market over the course of 5 years. Okay. So the yellow is April, the red is March, and the blue is February. Now, I'm going to point out several different things about this data, which I find really interesting and which tells us something about what's happening right now. If you look back at 2017, 2018, and 2019, you're going to see a very clear trend in what happens in February, March, and April. February sales, or these are not sales, these are showing numbers. So this is the number of showings for every listing on the market on average. This is an average. Okay, so 2017, we can see that February showings are lower than March showings and that April showings are lower than March showings. So we kind of have this up down trend, happens every single year. 2017 happens, 2018 it happens, 2019 it happens. And those years are pretty representative of all the years before them. This is before this whole COVID craziness really changed the way our market moves. And then you see 2020, and that's where we had our first significant change in our real estate market and the way things happen here and the way seasonality happens. And understanding the seasonality of it is going to help you understand what's happening right now in 2022. So that's why I'm going over this. So in 2020, you see 8.7 showings is that blue bar in February. So we've got this pretty big spike in February showings in 2020. Now, remember, this is a period of time when we had no idea COVID was happening. There was a virus in Asia, but there's been many viruses in Asia. So I don't think anybody in the US it wasn't impacting the real estate market at that point. So we just had a lot of showings. It looked like it was maybe going to be a banger year. And hey there, Dennis, thanks for joining us. And then come March, you can see that it drops way down. Well, typically that would have boosted up, being the busiest month of the year. But remember what was happening in March of 2020. We here in North Carolina were on a 2-week lockdown. They shut down schools I believe it was the second Friday in March. They shut schools down. We went on lockdown, and they told us that realtors were, what did they call us? I don't know. We were important.
Non-essential.
Essential. Yeah. No, we were essential. So we were essential. So we were still allowed to show homes. But I don't know what you saw, Trevor, but I was dealing with a bunch of clients at the time. And I had one client at that time who decided they were going to go ahead and proceed with their sale. The only client that did that was somebody who was relocating here from another area. They had a job here. They had to buy a house. They needed a place to live. The rest of my buyers were all move-up buyers. And so they didn't have to buy a house. So they're like, you know what? We're going to wait this thing out and see what happens. I'm sure that was very typical for most people at that time. Okay. So we lost all those sales in March, or those showings in March. It went down. There's still lots of sales. Keep in mind, there's still lots of sales here. Just so you know, for some context, 2017, 2018, and 2019, those were very banger real estate years. Now, it doesn't look like it compared to 2021 and 2022, but we were seeing multiple offers in all of those years. It was competitive. People were losing bids with that kind of market. So that was still the case in 2020. And then you see that in April, it drops down again. And that was just kind of like, it was just a different trend. It was the beginning of the trend of the way things happened was completely differently than it had been in the past. Okay. So moving on to 2021, banger year. That was like the best year that we have ever had in this real estate market. And that's when showings skyrocket to 17 in February per property, 19 in March, and 21 in February, or in April, I'm sorry. And so if you look at that past data and then look at today's data, you see that April of 2022 is really, yes, there's a downturn. You can absolutely see it. 21 showings per property in April of 2021 and 14 showings per property in 2022. The other thing that I've got on this sheet, I don't know if you guys can see it, but those lines, the lines kind of up here, I don't know if you can see my mouse, but the lines that are going across, that's the interest rates, correct? Or no, Timothy, is that the interest rate? Do we have that graph that has the interest rates on there? There we go. That's the graph with the interest rate. So you can kind of see that right now in 2022, the average interest rate is 4.09%. And that's really close to 2017. And it's lower than 2018. And yet showings are still 2 to 3 times higher than those earlier years, 2017 and 2018. So we are seeing a slowdown compared to last year, but compared to normal markets here, we're still 2 to 3 times higher than what is typical for our area. Trevor, you have any thoughts on that?
No, I mean, 2021, obviously, like the record low interest rates and the pent up demand from 2020 just exploded that year, no doubt, and obviously still a lot of challenges because the inventory wasn't there. And then you jump into 2022 and here we are with the higher rates. And so I think that's starting to slow down some of the demand a little bit. But there's also this sense of, buyers that have been maybe shopping for a home for a long time or just kind of frustrated and are at the point now where they want to stop. The other thing I think that we're seeing a lot is, like you mentioned, move-up buyers. Move-up buyers are not moving up right now because most of them, if they bought within the last few years, they got a record low interest rate, or they at least refinanced to a record low interest rate. And so why would you want to trade your 3% mortgage for 5.5%, at a much higher price? So
it's really hard. I personally have a 2.25% interest rate on my house right now. And we've been wanting to buy a home. And I'm telling you, the mental gymnastics that I have to do with myself to get over, okay, I'm just going to get a 5% rate for a much more expensive house. Even though we're not planning on selling our house, but still, it's just, it's almost too much to get over. Just the sticker shock of it. You know what I mean?
Yeah.
Yeah, for sure. So, one interesting thing, totally just lost my train of thought. Here I go, live video, and I can't remember what I was getting ready to say. Oh, so I was going to talk about like some of the stories that you hear. So all of this data, it's only as valuable as, the time that it was taken from. Like just because April doesn't look like it's that much lower than the previous April, that doesn't mean that things haven't bottomed out in May. They could have. And there's really no good way of knowing until after all of that data has been collected and analyzed. And that usually happens at the end of the month. So I'll have the May data in June, and I can talk about it then. So I wanted to share just a few stories, and you can share some of yours too. Sure. One, I actually polled a lot of agents in my office, some on my team, some not on my team. I wanted to get as big of a selection as I could. And so like one listing agent was telling me that she listed a property in one of our most popular neighborhoods in this area, big planned community. Those are super popular. Everybody wants to be in the big planned communities. And she put it in coming soon. And usually when you go into coming soon, you can schedule appointments then. In the first couple of days, she got no appointments. And she was like, whoa, why do I not have any appointments on this property? Because it's like super popular price point too. And so that was something interesting. I spoke with somebody else. This was another listing agent, and he was listing in the same geographic area, but in the 300s. And that last one was like in the 500s. And he said that he had tons, and he put it up on coming soon, and he had tons of showings scheduled. So, those are two specific things, but it's really hard to tell, like just one or two instances is just not enough information to really know. Like, for example, April, that was a slow April, my best April ever in the history of my entire career, as far as like inquiries and the number of buyers that called me wanting to buy. So even though it slowed down, my business didn't. And so it's really hard to take one person's business, because who knows? She could have put that property on the market and there could have been bad weather. You know what I mean? Or it could have been a bad news day. You know what I mean? A bad news day where people are going, oh my goodness. And then, by the next day, they're like, let's schedule something. You know what I mean? It's just really hard to tell until you get past the month and look back. So why don't we pull up some of this mortgage information and see what you've got.
Speaking of stuff that changes fast.
I know, right? So that's a good question, actually. How quick do you get mortgage information? Do you get like day to day, like the number of mortgages that are applied for? And
like we have access to that data. I don't track it because like to me, like I judge how is my business doing. And when we look at real estate, as you know, what's happening in Raleigh and Cary and stuff, like that's not the same thing that's happening in Charlotte. It's not the same thing that's happening in Austin.
True.
And so I get a lot of people on the mortgage side that like people are shopping all over. I've got people, because I do loans, Texas, Alabama, Georgia, South Carolina, like all over the place, and so it's interesting to see. And I can't really say like, okay, this is what's happening, right? Because it's very market specific. And so I've got to really pay attention for the buyers that I'm working with and rely on the agents that they have and really good communication with the agent to get a better understanding, especially if I'm working with a buyer that's moving to a market that I'm not familiar with.
So you really only get national mortgage data. You don't get local mortgage data.
No. Yeah.
So that's really interesting because
I think we could get access to it, but like, it's not really as
organized
relevant.
in an easy way to get it, or maybe?
Well, it's not necessarily as relevant, because like what's happening here in Charlotte, while it's certainly relevant for Charlotte buyers, I think, for the mortgage market in general, the national trends kind of, are fairly consistent across places.
Gotcha.
Although we are seeing some things and some very I know you guys are running into some potentially overpriced stuff, but some of the other hot markets as well.
Yeah, I was reading an article. Gosh, I wish I had pulled that in for this talk today, because it would have been great right here. But it was some data that had been compiled by, I can't remember who the organization was, but they were showing the most overvalued markets. None of them were markets that I work in, but the Northeast and some of the Southwest were some of the most overvalued markets, where they're expecting prices to continue to maybe potentially drop.
Yeah, Core Logic and Moody's Analytics.
That's what it was.
Put that together, and now it was interesting to look at that as well. And I think I read that article, and the bottom line I think on that one that they said was every housing market forecast just take with a grain of salt.
Yeah.
Because they pointed out that if you look back at even their forecast or forecast from Zillow, 2 years ago, everybody's has been wrong, and
right.
And again, you look at the people that are saying, well, the market's going to crash next month. It's going to crash next month. And they've been making that same pitch over and over again.
Yeah.
And I'm like, look, at some point, if your real estate is a long-term investment, if you're buying and you love the house, you got to not worry about what the interest rate fluctuations are or what the home price fluctuations are, because historically real estate goes up in the long term,
Right.
So,
yeah, I think the best fallout from this mortgage rate increase would be investors getting out of the market, just feeling that it's not the best investment right now and making it easier for owner occupiers to get in. I'm really hoping that that's
we've seen that from what was happening was, we had a lot of, I want to dip my toe in the water and become a real estate investor, so the people that I can barely put 20% down and I want to buy my first investment property, I want to buy an Airbnb, that sort of thing. Those are the people that we're starting to see go away from the market. Mm-hmm. The big cash players are still there, but they're operating, I think, more on the institutional level, so we don't really see a lot of that. And obviously their transactions in cash, we don't have, aren't recorded as mortgages. So we don't have the accurate data on that.
Right. I did. And this was it was not statistically significant, but sometimes you just need this information I'll get to your question in just a second. Sometimes you just need this information to kind of give you a story to wrap your brain around, to see, well, this is maybe what's happening, but that doesn't mean it is what's happening, but maybe it's what's happening. So 6 months ago, I pulled, I think it was 100 or maybe it was 500 recent sales in the MLS in a couple different price points. And then I cross reference those with our county or what's it called? Tax records, excuse me, with our tax records, just to see who actually bought the property. And if it was an LLC, or if it was somebody that did not live, that their mailing address was not the same as the property, I kind of marked it down as an investor. And a decent number of those, probably half of those, were those kind of I live here in Apex, or I live around the corner and I bought a house in a neighborhood near mine. They weren't mostly LLCs or actual corporations buying them. So there were, and it was I think it was something 23% for the under 400 market. And it was something 10% for over the 400 market. So we're seeing mostly owner occupier purchases here in our area. I just thought that was kind of an interesting thing. You hear about all these investors in the market, and they certainly are, but I was just curious about what percentage or how much of an impact are they really having in most purchases. Let
Yeah.
me get this question here. GBS says, hey folks, do you guys have any insight on Cary housing market in the coming months? It's hard to forecast what might happen, but based on your experience, any thoughts? So from previous, let me preface this by saying I don't have a crystal ball. I know I say that all the time. Nobody knows what is going to happen. What I can tell you is what's happened in the past. So in previous downturns, when markets, lost value, which has happened in the past, and we don't know if that's going to happen this time, but when it has in the past, the closer into the core, like locations where are close to like commuting areas, those are the places that recovered the most quickly. They're also the most expensive areas, but I believe they carry with them the least risk. So I would be really comfortable with someplace like Cary. I do think that dynamic may have changed a little bit, not completely, because I still think, people do want to be near places they can commute to. What people tell me all the time is, I don't have to commute, but for future sales, I want to be, or not necessarily just future sales, but for future, if I change my job or something like that, I want to be someplace where I'm commutable to something. So, anyway, I'm sorry, I'm backtracking a little bit, but the dynamic of wanting to be close in has changed a little bit with all these work from home people. So we might not see that exact dynamic of the inner core areas rebounding more quickly, but we probably will. Does that make sense? I hope that answered your question. Do you have any thoughts on that, Trevor?
No,
Okay. All right. Well, why don't we get to your
Cary market is all you.
Yeah, I hear you. Why don't we get to your lender stuff? Timothy, can you pull that stuff up there? There we go. All right. What are we looking at here?
Okay. So this comes, if you guys want to check the data, which I'm a big believer in accurate data.
Mm-hmm.
And, I want to find stuff that's publicly available because you don't want to necessarily have to call me every time you want an answer for those that love data. So FHFA.gov is where you can get this information. The downside to it is it lags about 6 months or so on the data. So, but what we have here is their most current stuff. This is showing you mortgage originations in the thousands going all the way back to 1998, because that's the big headline every week is mortgage purchase applications are dropping, or they're this much percent change. And it's like, I can't follow the every week to week change in percentage of mortgage origination. So you just kind of look at the trend and you see where we're at. Right. And so on this chart here over on the right-hand side, you can see towards the end of 2021, we were up around 400,000 mortgage purchase applications, for a 6-month moving average, which
so this
again,
is just purchases right here, not refinances.
This is, I want to say just purchases. Yeah, I think I have another chart that shows the refinances in there. And so this is your, so you can see, obviously we had the big spike like you showed, in 2021 from the pent up demand. But again, look at where that was compared to 2005, 2006, the previous housing bubble. We're still well below those levels. And even in the years leading up to the housing bubble, the early 2000s and late 90s, those levels of mortgages were still above where we're at today. And so when people talk about there's a downturn, there's not as many people buying houses, that's true, but it's all relative, and so I think we're going to return back to a level probably somewhere akin to the average of 2016 through 2019.
Yeah, that's what I'm thinking too.
So that's a significant change from the applications that we have today, but it's not necessarily like the whole market's going to crash, because that's one of the things this is my big pet peeve. People talk about there's going to be a big mortgage crash, and we can talk more about that later with some of the data, but
some of that's just clickable headlines.
Yep.
It's National Enquirer stuff, man. Say something and people will watch it. Yeah, for sure.
Yeah. So this just shows you, kind of where the trend has been. It took a while for the housing bubble, the collapse, and then 2011, we've just been on an uptrend since then. And so we're just kind of going to stabilize, and that's just my opinion. Obviously, the spikes and the dips that you see on this chart is the seasonal, like people don't buy as many houses in the late fall, winter time frame, and then they shop in the spring and summer. So
Yeah. Yeah. My thought about the whole, the type of market that we're going to return to, like you're saying, you think we're going to return to the 2016, 17-ish sort of market. I agree with that. And I think that if we had not had COVID and we had not changed our economy into a work from home with a pretty big percentage of work from home people, we might have seen more of a crash. You know what I'm saying? Like, we wouldn't have gone back to that baseline. We would have gone below the baseline, in my opinion. I mean, I could be totally wrong, and I'm just kind of pulling this out of thin air anyway. I'm not an economist. It's just kind of a gut feeling that, like, because so many people can work from home and move to a city without getting a job there, we can sustain more people here than we have jobs for. And because it's a desirable place to live, people want to live in Raleigh. You know, it makes these top 10 lists all the time. I think we're going to continue to have that relocation here, even as things kind of shift around. Let's get to some of these questions here. Mac Davis, with the rising interest rates, do you think fewer people will buy, giving a chance for new construction to catch up? So I'm hoping that these rising interest rates first boot out a lot of these investors who it's not as good of an investment if they have to pay more for the money that they're borrowing to purchase the homes. What's your thought, Trevor?
Yeah, absolutely. And the Federal Housing Finance FHFA, basically, you know, several months ago they started slapping on extra fees on investment properties, you know, or high balance loans, if you will, to try to sort of dissuade some of those. And when they initially did that, we didn't see much impact. But now that rates have shifted higher, in addition to those extra points and fees, like, it's definitely having an impact. I don't know that new construction will, like, I don't think we should be so focused on waiting for new construction to catch up. I think what'll happen is eventually things will stabilize. People will get used to seeing higher interest rates. The move up buyers are eventually going to come back. That's going to give us the inventory that we need because they need to sell in order to move. And that's when things are going to balance out. But in the short term, definitely, I think buyers are going to have less competition out the door, but it is going to take a while for things to get back to, you know, kind of a more balanced market.
Yeah. Yeah. You know, when in 2020 and 2021, I kept thinking it's going to take, you know, 3 or 4 years for things to kind of stabilize. Cause I feel like we changed the type of economy we have, you know, like I was just saying earlier, like work from home has created a new real estate market in Raleigh that didn't exist here before, of people that don't work here. And so that just, it's almost like you're taking these high cost of living areas and you're spreading those people across the US rather than gathering them all in just these few large cities. Yeah. You know what I mean? It's like, you know, kind of like the tide rises all over when these huge waves kind of just spread, you know?
Yeah. Well, and the other impact that I think that we saw is a lot of people accelerated their moving timeline, you know, so people that may have normally in a normal market have waited till 2024 or 2025 to move, decided, man, interest rates are at record lows. We want a bigger house because we want more space. We're working from home, like you said. And so those are people that normally would have been a couple of years from now, jumped into the market in the last year.
True. Yeah. All right. So Lazy Dreaming World says we plan to visit Raleigh next month, but looks like we're now in recession officially. Maybe not a good time to consider to relocate. Yeah. I mean, it really just depends on your specific situation. I mean, you know, people are always buying and selling. If personally, the way I make those kinds of decisions is how secure my job prospects are. If I feel like I'm pretty secure, if I'm in an industry where we have like a shortage of employees or that sort of thing, I'd feel a little more safe making those kinds of changes. So it really depends on how you feel about your particular situation, for sure. Jackie, let's look at Jackie's question here. Relocating from New York State to Durham very soon, needing housing with land, but half to 45-minute commute into Durham. Any suggestions where to look? Well, tell me in the comments what kind of housing you're looking for. I mean, I have lots. Actually, you know what? Send me an email. We'll do a Zoom and we'll talk, because I have lots of suggestions. It really just depends on hey, so we're not going to be nasty. We're not telling people to stay where they are. Everybody wants people to stay where they are after they move here. I move here. Now I want everybody else to not come here. Anyway, thanks for commenting, Jackie. Appreciate it. All right. Do you have another slide to look at?
Yeah, I got some more.
All right.
I got more data
up there. There we go. All right. What are we looking at here?
Okay, so this is a chart that's available on Mortgage News Daily, which is a site I highly recommend for people that want to stay tuned into interest rates and stuff. This one on the website is actually interactive, so you can look at it. But this is showing you the shaded background is the mortgage purchase index. So that's home purchases, basically, or an index of home purchases. And the yellow line is your interest rates. And so again, in terms of the question of mortgage originations and how many people are buying houses, this is just going back 5 years. And you can see for that purchase index on the far right side, and this is all the way current as of today, your purchase index is basically at the same level as it was 4 to 5 years ago. And so it's definitely a downturn from the high, which I highlighted there of 348, in 2021. But it's kind of normalized. Now, certainly I think it's going to take probably about another 6 months before we see if this goes lower, and if it does, how much lower it's going to go. But as you can see, at the pace at which interest rates have risen over the past several months, throughout this year, that purchase index, it didn't like plummet, like you can see that big, you can see that big,
it to.
Yeah, you can see that big dip, in 2020 when COVID hit. So I was expecting at the rate at which interest rates are climbing, we would have seen a much more pronounced decline in the purchase index, and we're just not seeing it. So people are still out there buying.
The truth of the matter is, if you go back 100 years, there is virtually no correlation between mortgage interest rate and purchases. I mean, there's data. I've actually got graphs on it on my blog from 2015 or something like that, where I pulled that. And it was some Harvard economist that actually put together these graphs. And there really was no correlation. And that's very surprising, but you can't really argue with the facts.
Yeah.
I'm curious what it's going to do, because there are correlations with other things happening in the economy. But not necessarily interest rates. Obviously people stop buying houses when they stop having jobs.
Yeah. And the next one I have on this, there you go. This shows you kind of where things were back at the peak of the housing bubble in 2005, in terms of the purchases in relation to the interest rates. So this tells me, obviously rates right now, they're still at historical lows, even in this 5.5 to, 6% potentially range, some lenders out there. But you look back to where it was then, rates were, above 6%, and people were still buying houses.
Right.
So they're, like you said, people are not going to stop buying houses just because interest rates go up. Eventually it's just like higher gas prices. You just learn to live with it, and it initially sucks, and you adjust and go from there.
Yeah. I mean, and there's some people that get priced out, but, there are just many people that just suck it up and just pay the higher rate, All right. And what do we got here?
This is from Statista. You can go on their websites. It's written there at the bottom there. But the dark shade is your refinance originations, and the light blue is your purchase originations.
Wow, that's really an interesting graphic.
So the refinance, we've been talking about this, at least on the lending side of things, because that's really starting to have an impact on some smaller lenders. Well, I guess on some big ones as well, but not really impacting their bottom line. But the refinance business was a huge boom, right? For a lot of lenders. And so now you have some loan officers that all they've known for 2 years is refinance transactions. Right. And so now they're trying to figure out, well, how do I generate business on the purchase side? Because I'm just used to people calling me asking for the lowest rate. And then that same person would actually call them again 6 months later to get the new lowest rate, So
for those of you that can't see, this is actually a 10-year graphic. So you can kind of see those light blue sales along the bottom. 10 years ago were a little bit lower, but they've kind of just crept up.
Yeah,
and
this
so
is through the fourth quarter of last year. So again, missing a little bit of data from, the beginning of this year, but I don't think it's, what we're seeing right now is not too far off from what this chart is showing.
all right. Anybody else got any questions? I think we covered a lot of information tonight. What questions do you have for us before we sign off for the evening? All right. Well, thank you, Trevor, for joining us tonight. Thank you all for joining us. Appreciate your time. And we look forward to seeing you on the next live.
All right.
Y'all have a good
Thanks.
evening.
Appreciate it.
Bye-bye.